Imagine a world where the electric dreams of tomorrow come screeching to a halt, not because of failing batteries or outdated tech, but because of a single, shimmering metal that's suddenly vanishing from the global stage. Picture this. Just yesterday, on December 29th, 2025, the silver market erupted into chaos, plunging over 11% in a single brutal session, wiping out billions in value and leaving investors staring at screens awash in red. From a peak of $84 per ounce, silver cratered to $71. A heart-stopping $13 drop that echoed through trading floors like a thunderclap. But amid this carnage, one voice cut through the noise, a voice belonging to none other than Elon Musk, the visionary behind Tesla, who issued a stark warning on X just days before. This is not good. Silver is needed in many industrial processes. His words, posted in response to news of China's impending export restrictions, sent ripples across the tech and automotive worlds, hinting at a looming nightmare for the EV giant and the entire green revolution. This isn't just another market blip, it's the shockwave of a perfect storm brewing, where geopolitical maneuvers, insatiable industrial hunger, and a 5-year supply deficit collide, to threaten the very foundation of modern innovation. As we dive into this urgent documentary, we'll unravel the mechanics of this market meltdown, expose the hidden forces pulling the strings, and reveal why Tesla's empire, built on the promise of sustainable mobility, could be teetering on the edge of a supply abyss that no amount of ingenuity might fully escape. To understand the full magnitude of this shockwave, we must first rewind to the frantic trading hours of December 29th, a day that will go down in precious metals history as one of the most volatile sessions ever recorded. Silver, often called the devil's metal for its wild swings, lived up to its reputation with a vengeance, opening strong after weeks of relentless climbing. The price surged briefly toward new highs before the bottom fell out. Traders watched in disbelief as sell orders flooded the exchanges, driven by a cascade of margin calls and algorithmic panic. The CME Group, the powerhouse behind futures trading, had stealthily hiked margin requirements just days earlier on December 26th, effectively demanding more collateral from leveraged positions and squeezing out the weaker hands. This wasn't a gentle correction, it was a bloodbath, with silver shedding more than $9 in mere hours, closing at around $71.23 per ounce, a staggering 7% drop that erased gains from the previous week's rally. Gold, silver's more stable sibling, wasn't spared either, tumbling $156 to $4,290. But it was silver's amplified volatility that stole the spotlight, falling harder and faster due to its smaller market size and higher beta. This plunge wasn't born from fading fundamentals, no. The industrial demand for silver in solar panels, electronics, and electric vehicles remained as voracious as ever. Instead, it was a liquidity crisis in disguise, where institutions, hedge funds, and even central players liquidated what they could to cover losses elsewhere in a holiday-thinned market. As the US dollar index spiked amid flight to safety bids, commodities like silver bore the brunt, their prices inversely tethered to the greenback's strength. Yet, beneath the surface, turmoil lurked a deeper narrative, one that Elon Musk's cryptic warning had foreshadowed: the impending stranglehold on global silver supplies, courtesy of China's strategic export controls, set to activate on January 1st, 2026, just as the world awakens from its New Year's haze. Elon Musk's intervention in this saga wasn't casual commentary. It was a red flag waved from the helm of Tesla, a company whose fate is inextricably linked to the availability of critical metals, like silver. On December 27th, Musk responded to a detailed X post outlining China's new export regime, stating plainly, "This is not good," and emphasizing silver's indispensable role in industrial processes. For Tesla, this isn't abstract economics, it's existential. Each Tesla vehicle incorporates silver in myriad ways, from the conductive pastes and battery management systems, to the wiring harnesses, switches, and even the photovoltaic elements in some models' solar integrated features. Industry estimates peg the silver content in a typical electric vehicle at anywhere from 25 to 50 grams per car, though some analyses suggest it could climb to over a kilogram when accounting for all electronic components and advanced battery tech. Multiply that by Tesla's ambitious production targets, aiming for millions of vehicles annually, and the numbers become astronomical. Silver's unparalleled conductivity makes it irreplaceable in ensuring efficient energy transfer within EV batteries, where even minor inefficiencies could slash range or hike costs. Musk, ever the forward thinker, has long championed the shift to renewables. But this warning underscores a vulnerability. Tesla's supply chain, already strained by lithium and nickel bottlenecks, now faces a silver squeeze that could inflate production expenses and delay rollouts. As silver prices hovered near record highs before the crash, Musk's alarm bell rang out against a backdrop of surging demand from the EV sector, which alone is projected to consume tens of millions of ounces annually by 2030. But with China's grip tightening, the question isn't just about higher prices, it's about whether Tesla can secure enough physical silver to keep its Gigafactories humming. or if this not good scenario spirals into a full-blown nightmare that derails the affordable EV dream for millions. China's move to impose export licenses on silver starting January 1st, 2026, isn't a mere bureaucratic tweak. It's a calculated geopolitical chess play that could redraw the map of global resource flows under the new rules from China's Ministry of Commerce. Only large, state-approved firms with at least 80 tons of annual production and around $30 million in credit lines will qualify for export permits, effectively sidelining smaller and mid-sized exporters who previously funneled vast quantities to Western markets. China, commanding 60 to 70% of the world's silver supply through its mining and refining dominance, has essentially declared silver a strategic asset, mirroring its past tactics with rare earth elements that once crippled global tech supply chains. This isn't a blanket ban, as some headlines scream, but the impact could be just as devastating, a sharp reduction in exports that exacerbates an already yawning global deficit. For years, China has been the world's top silver producer, outputting hundreds of millions of ounces annually, much of it as a byproduct of base metal mining. But with domestic demand soaring from its own EV and solar booms, think BYD and massive photovoltaic farms, the country is hoarding more for itself, leaving the rest of the world scrambling. Physical inventories in key hubs like COMEX have plummeted 70% since 2020. London vaults are down 40%, and Shanghai stocks hit 10-year lows, creating premiums where physical silver trades at 80 pluses per ounce, while paper prices lag behind. Musk's warning amplifies this tension, as Tesla relies on a just-in-time supply model that could buckle under restricted flows. Imagine Gigafactory lines grinding to a halt, not for want of ambition, but for lack of a metal that's suddenly treated like a national treasure. This export hammer isn't isolated, it's part of a broader resource war, where nations fortify their industrial bases amid escalating trade tensions. And the US, under incoming administrations, might respond with its own classifications of silver as a critical mineral, further igniting the powder keg. As we peel back the layers of the supply nightmare, the numbers paint a picture of unrelenting pressure that's been building for years, culminating in the market carnage we witnessed on December 29th. The global silver market has been in a structural deficit for 5 consecutive years, with 2025 alone seeing a shortfall of 120 million ounces, as demand outstrips supply by a cavernous margin. Cumulative deficits from 2021 to 2025 approach a staggering 820 million ounces, equivalent to nearly a year's worth of global production vanishing into thin air. Industrial demand devours over half of all silver mined. Solar panels alone guzzle millions of ounces for their conductive layers, while EVs like those from Tesla add another layer of insatiable appetite. Projections for 2026 are even bleaker, with China's restrictions biting. The deficit could balloon to 300 million ounces or more, pushing prices toward $100 or beyond as analysts from major banks forecast. This isn't speculation, it's physics meeting economics. New mines take a decade to develop. Ore grades are declining, and recycling can't bridge the gap fast enough. Enter the EV revolution. Tesla, leading the charge with models like the Cybertruck and Model Y, embeds silver in battery contacts, circuit boards, and power electronics to maximize efficiency. But as production scales, Tesla delivered over 1.8 million vehicles in 2025. The aggregate demand explodes, potentially requiring tens of thousands of tons annually across the industry. Musk's not good encapsulates this dread. A world where silver's scarcity forces redesigns, cost hikes, or worse, production caps that undermine climate goals. The emotional toll is palpable, investors reeling from the crash, manufacturers like Tesla facing boardroom crises, and consumers dreaming of affordable EVs only to confront rising sticker prices. Yet, in this darkness, a silver lining emerges. Crises like these often birth innovation, pushing companies to seek alternatives or efficiencies. Though silver's unique properties make true substitutes elusive, delving deeper into the market's psychology during this carnage reveals a tapestry of fear, greed, and mechanical forces that amplified the December 29th plunge into something far more profound. Trend-following algorithms, those emotionless behemoths controlling billions in assets, have been riding the silver wave upward for months, buying every dip and propelling prices to $84. But when the CME's margin hike triggered a reversal signal, crossing key moving averages, the bots flipped en masse, dumping contracts in a feedback loop of selling that begot more selling. Retail traders, lured by the breakout euphoria, chased highs only to hit stop losses at $80, $78, then $75, adding fuel to the inferno. This wasn't disdain for silver's value, it was survival mode, where funds liquidated liquid assets to meet margin calls from souring bets in bonds or currencies. Echoes of past crises resonate here. March 2020's pandemic crash saw silver nosedive 30% from $18 to $12, amid dollar hoarding, only to rocket to $30 in months once the Fed intervened. Similarly, 2011's flash crash dropped silver $6 in a day before rebounding to new peaks. Musk's warning injects a modern twist. Unlike those episodes, today's squeeze stems from real structural shortages amplified by geopolitics. For Tesla, this volatility translates to hedging nightmares. Locking in prices amid swings could lock in losses, while going unhedged risks budget blowouts. The emotional highs peak in boardrooms, where executives grapple with the irony. Silver, once a byproduct taken for granted, now holds the key to Tesla's dominance in a world racing toward electrification. As prices steadied slightly on December 30th, whispers of a V-shaped recovery circulated, but the underlying dread lingers. Will China's ban trigger a true blackout? Or catalyze a mega rally that vindicates the bulls? Building toward the climax of this narrative, we confront the trillion-dollar signal hidden within the carnage, the decoupling of paper and physical markets, a harbinger of explosive recovery on the horizon. While futures prices tanked to $71, physical premiums in Shanghai and dealer networks held firm at $80, a yawning arbitrage gap screaming of scarcity. China's controls will widen this chasm, as Western buyers, Tesla included, scramble for shipments, potentially accelerating a drain on already depleted vaults. Musk's prescience shines here. His warning predated the crash by days, spotlighting how EV giants like Tesla, with their voracious need for silver and solid-state battery R&D and autonomous driving sensors, stand first in line for pain. Projections paint a dire 2026, deficits swelling to 800 million ounces cumulatively, prices testing $150 in extreme scenarios as industrial users hoard. The green energy revolution hangs in the balance, solar farms stalling without silver paste. EVs like Tesla's becoming luxuries amid cost surges. Emotional crescendos build as we envision a world bifurcated, nations like China fortifying their stacks, while the West faces blackouts in supply chains. Yet, history teaches resilience. The Fed's liquidity injections could flood the system anew, propelling silver to new heights and rewarding those who held through the storm. Tesla, under Musk's helm, might pivot to silver-efficient designs or vertical integration, turning nightmare into opportunity. As we approach the resolution of this tumultuous tale, the path forward crystallizes amid the debris of December's market quake. Silver's plunge, while painful, serves as a reset, flushing leverage and resetting sentiment for a healthier ascent. Musk's warning, far from defeatist, galvanizes action, urging industries to diversify sources, innovate substitutes, and advocate for policy shifts. For investors, the message is caution tempered with optimism. Physical holders weather the storm unscathed, their ounces undiminished by paper gyrations. Tesla's looming nightmare could evolve into a catalyst, spurring global cooperation or breakthroughs that secure supplies. Looking to 2026, with China's ban in force and deficits deepening, silver's trajectory points upward, potentially eclipsing $100 as the EV boom accelerates. The shockwave has passed, but its echoes remind us, in the race for a sustainable future, silver isn't just metal, it's the thread weaving innovation's fabric. Hold steady, the rally awaits those who see beyond the carnage. Thank you for staying with me till the end. Here on The Scope, we dig past the headlines and uncover the hidden layers history tried to bury. If this documentary made you think differently, hit subscribe. Your support tells me to keep creating deeper investigations. Share this video with someone who loves powerful untold stories, and leave your thoughts in the comments. I read everyone. A new, even stronger documentary is already on the way. So stay curious, and I'll see you again soon, right here on The Scope.